The stock market is selling off today. The Nasdaq is down about 2%, the S&P down over 1%, the Dow is down over 0.5%. Ape stock is soaring about 16%. AMC is down about 10%. If you guys have not watched the last video, you definitely want to. Now, in this video, we're going to be going over kind of my expectations out of Ape and AMC over the next coming weeks in regards to everything we have going on in the markets, in regards to earnings with the Fed, economic data. Guys, we're going to get into it. Is the risk here that these stocks are going to fall, or is there a greater chance or a greater risk that these stocks will continue to rally? Let's get into it. So first things first, I do want to go over the important earnings coming out in after hours. By the time you guys are watching this video, they might be out. I would highly recommend you guys go look and see what's going on with these earnings. More specifically, you want to look at where the iPhone or just phone semiconductor numbers are looking like for NXP. They are a semiconductor company. They are contracted out by Apple, and they're one of Apple's biggest customers, right? They make a lot of products for Apple. So these earnings will be super important. And like I said in the earlier video today, they will give you some degree of guidance for Apple. If NXP, and it's NXPI is the actual ticker symbol, if they have bad earnings, that's going to be really bad for Apple. That's going to be a bad taste in people's mouths heading into Thursday when you get Apple, Amazon, and Google that will report earnings. Now, tomorrow in pre-market, ExxonMobil, UPS, GM, Pfizer, Caterpillar, McDonald's, Spotify, Phillips 66, and Marathon. I do think specific sectors will be important here, right? ExxonMobil, Phillips 66, Marathon, energy companies. That's going to be key. UPS is going to be important for delivery kind of companies, right? What their demand looks like. And that could also have an effect on the markets because Amazon is one of the biggest companies in the world and they report earnings on Thursday. Pfizer, you want to watch healthcare. GM, you want to watch the legacy automakers. If GM has good or bad earnings, it's going to send Ford up or down. It's going to send Volkswagen or just these other automakers up or down, right? So you can get specific sector moves, but NXP and after hours I think will have a pretty big impact on the markets. Maybe not in after hours trading, but certainly will have an effect on Apple directly coming tomorrow, whether they are good or bad. So that's what we have as far as the earnings rundown. Like you guys know, we don't have a lot of economic data until Wednesday, and then you are going to get just a brief recap. If you guys don't know the lineup for this week, I'm going to assume a lot of you guys do because I am going to assume you guys watch these videos, but if you don't, a brief rundown for you guys. So at 10 o'clock in the morning on Wednesday, ISM manufacturing PMI for January. Also at 10 o'clock, the JOLTS job openings. And then you got the Fed meeting Wednesday at 2 p.m. That's going to be key as well because right now the markets are pricing in that the Fed is going to do 25 basis points, and they're probably going to do that. They've never really deviated from market expectations in like 60 years. So it's like an unspoken rule. The Fed does what the markets are pricing in. So throughout 2022, the Fed was being more hawkish and more hawkish, saying they're going to continue to raise rates. The markets priced that in, so it wasn't a huge shocker when they gave us those quarter point rate hikes, those 75 basis point rate hikes. It's not like you were caught off guard because you were expecting a 25 basis point rate hike. No, you were expecting those 75 basis point rate hikes. So that didn't cause the sell-off. And I don't think a 25 basis point rate hike would cause a sell-off. Now, if the Fed does keep rates flat and they don't change rates or they raise rates by 50 basis points, that would not be expected by the markets. That would cause a really big sell-off. Even if they cut rates, that would cause a huge sell-off because historically markets don't crash until the Fed does cut rates. 2022 was really an anomaly because the markets went down so much when the Fed was raising rates. Usually markets actually rally when the Fed raises rates, and we can actually go ahead and pull this data up for you guys. It's very simple to do. The Fed the St. Louis Fed, you guys can see that all of the biggest boom times in history, the Fed has really been raising rates in the late 80s, right? Until 1989. And then you kind of started to boom out, like bust out. Fed started cutting rates, and then they really started cutting rates when you went into to the recession in the early 90s. Same thing back here during the tech bubble, right? Things were good from 1998 till 2000. The Fed was raising rates the whole time, about 3 percentage points. And then they start cutting rates because a recession comes, and that is history. Same thing. They start raising rates in 03, 04. And then they started cutting rates by 2007 when things started to hit the fan with the Great Recession. And then same thing even back here before COVID, right? From 2015 until 2019, they were raising rates. They started cutting rates a little bit towards the back half of 2019, and then they fully cut rates in 2020 when COVID came. Well, now you've been going straight up with the federal funds rate. They are squashing out inflation, but if they start to cut rates, it's going to signal that there is pain ahead for the economy, because after all, if you're the Fed, then you have the most data. You have the most information on what is currently happening in the economy. After all, you make decisions based off of a population of 350 million people in the world's largest economy, right? They know these things. Whatever they're doing, it's a strategy, right? So that will be key, and markets don't expect the Fed to deviate from 25 basis points, but what he has to say will certainly be important for the markets. Now, let's get into the data behind AMC and APE here today. AMC is starting to come back a little bit right now towards the end of the day. You are only down about 7.99%. Still quite a decent drop, but even if you look at APE is up more than that. Let's go ahead and pull up APE. So actually on a net basis, you would actually be positive today, right? APE is up 21%. APE is absolutely going ape today. And the reason for this is because APE shares, just to boil this down in simplest terms, what you would be voting on is to take APE shares into AMC, and then at that point they would have a lot of capital that they could raise. Right, about $22 billion could potentially be raised by AMC, and this is making analysts very, very excited. And if APE converts to AMC, and AMC's at $5 per share, APE's at $2.33 per share, there could be a lot of money to be made there, and that is why you see APE going up and AMC going down. But overall, analysts as well as myself think this could be a fundamentally positive thing for AMC, and I do think it could get us closer to a short squeeze, because if these analysts are correct that we mentioned in the last video, and AMC could raise up to $22 billion, just call it $15 billion or call it $5, and they could pay off all of their debt, well, there is no short thesis on AMC. At that point, you would see all the shorts cover on their short positions probably instantaneously, because why would you be short if there's no way in hell this company's going bankrupt? There's no way times are getting worse than where they were in 2020 or 2021 in the future, unless something very dramatic were to happen. COVID resurgence, new pandemic, obviously, knock on wood, not going to happen, right? So for a lot of reasons here, this would be fundamentally very bullish, and that leads me to believe that would be fundamentally bullish for a short squeeze, or tactically bullish, I should say, for a short squeeze in AMC at that point, because even then, APE would no longer exist, so it would be incorporated in AMC, so it wouldn't be like you'd have this correlation right now where APE's up a lot, AMC's down quite a bit. No, it would just be AMC, and I do think it would greatly benefit the stock. Now, that vote does come on March 14th, so we do have some time left. And we are going to get earnings that come out with AMC, and I do also think that is going to be a major catalyst. Could be for APE and AMC. AMC earnings might actually make both of these assets go up quite a bit, and that is because I do think you're going to get closer to free cash flow, and you're going to see positive EBITDA again, and it's going to look very strong. And if you get that, either one of those things, that's where that short thesis could continue to deteriorate for the short sellers. Now, over the short term, the next month or two, I do think APE could outperform, especially if the sentiment starts to change that we're going to vote no for this to actually voting yes to the proposal. I think you could see a lot more momentum in APE, and after all, APE shares do have a higher voting percentage, and you are seeing Antura Capital that is getting millions and millions of shares. They're taking their debt and taking that into the shares, so they're going to have a pretty big voting power potentially to get this thing passed. So I don't know if it's really going to matter if anyone comes out here and says, yeah, you should vote yes for this or you should vote no for this. I think it's almost a certainty that this will go through. After all, there has not been too many things that have been voted on over the last 2 years with AMC that have not been approved. Just think about it like that. So in all aspects here, I don't think AMC is destined to drop a lot, and you don't necessarily have to see this correlation where APE is up, AMC is down. I do think AMC will hold resilient around this $5 level. Like I said in yesterday's price prediction video, I mean, you dropped under $5 per share, and now you're back at $5.09. Not a huge difference above 5, but still a difference nonetheless. So I do expect some positive things out of both of these stocks over the next couple of weeks, especially once you do get down to earnings, and if the earnings are good. Now, as far as the live short interest of free float, sitting at about 23%, 118.31 million shares that are currently sold short. So even if you're comparing APE to AMC, like we're going to do here in a second, there's no comparison, guys. AMC is the real short squeeze trade when it comes down to it. But due to this arbitrage situation we have, this potential that APE gets converted into AMC, you can see a lot of attention with APE as well. And I do think they both could be warranted for an upside trade. Now, I would wait just a little bit on AMC. I would get closer to earnings to get that kind of earnings run up. And if you're playing options, personally, I would play options that have a longer expiration after earnings as well to see. I would probably play the April or May or even June contracts at this point. That's probably where you get the best risk to reward. But nonetheless, I do think the short squeeze is coming. Like, I don't care what any of you guys think, to be 100% honest with you. I really don't. I mean, you could say that anything you want. I mean, I know what I know. I know what the data is. I've been studying it just to the point where it makes your fucking eyes bleed, the data here in this trade, and it couldn't be more relevant right now than any other time in history. After all, you're sitting at the same levels you were before the June rally, and a lot of things are similar. I mean, the cost to borrow rates are in the 300s. Cost to borrow average at 331. Cost to borrow max at 358, and the cost to borrow rate on Interactive Brokers at 103%. Let's take a look at the option activity for AMC, and then we'll look at APE as well. So on the date, 94 orders totaling $26.9 million, positive order value of 4%. No bueno, not very good. Go ahead and take a look at APE. And short interest, about 7%. 7.34% free flow out on loan. Days to cover 1.35, 92% share utilization. This is really the number that has moved around the most, that has actually increased the most as of recently. The freaking cat turned off my light. Okay, so the numbers here, not even close to what you're looking at on AMC. Cost to borrow rates at about 10%, over 10 million shares available to be lent out. The stock is, though, going pretty parabolic, and I do think this kind of momentum could last a while, guys. You've never really seen a big rally in APE. This is the most sizable rally that you have seen in a long time, and you did break above the last level that we rallied from 65 cents up to about $2. That was back here in December, specifically December 27th was the last day of this rally. You're above that right now. You're at $2.35, so I do think there's a lot of momentum with APE, and I would definitely not want to bet against that as of right now, guys. So that is pretty much going to be all for this video. We did cover a lot. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.